Hey, welcome everyone. Tom here from Park Avenue Trading, your chief dealer, keeping you sane in insane markets. With a little question and answer, I decided to do for you guys. I received an email from a subscriber, and feel free to email me with questions. I'll be happy to answer them. Tom at parkavenuetrading.com or support at parkavenuetrading.com. I always read the emails, especially when young people are quite interested in Forex trading and trading in general. So I enjoy actually answering them. And I'm going to do my best to answer a question that a subscriber posed. He said, "What would you tell your 20-year-old self starting off at trading?" When I first thought about it, I said, "Well, that's a pretty deep question." I got on a trading desk when I was about, well, I started in 1987. I started in the back office of Deutsche Bank, and I had to work my way into the trading room. I became a position clerk in the trading room at eh, 2021. So I actually got on a trading desk at a different bank, 𝐃𝐨𝐧'𝐭, when I was about 24, almost 25 years old. I became the youngest chief trader on Wall Street at 27. Okay, so I worked my tail off, and it was very, very arduous, and I had to really hone my skills. I developed a proprietary desk. But that being said, um, the first thing I would say is stop searching for like the perfect combination of indicators, RSI and MACD. They're very, very lagging indicators. The next thing I would say is learn how price moves. It's not random. Learn how liquidity works. Now, a lot of the guys today talk about liquidity zones and liquidity sweeps. I just call it support and I call it resistance. We didn't have these terms for it back in when I was trading. It was just called support and resistance zones, okay? And you can use Fibonacci for that. You could use a measured move type of calculation. That's a measured move is more of a you got to be really skilled to like use a measured move, and you got to be really confident in it. So why is the market so high? The market isn't random, okay? It's engineered really to fool common people. And why do I say that? Because it's counterintuitive. The market is counterintuitive. Write that down. The market is designed. It is what it is, and it is just counterintuitive. I learned that when I was working with Dr. Van K. Tharp. Unfortunately, he passed away, but he was one of my mentors that I paid a tremendous amount of money to. He was a trading um, modeler. He was into neuro-linguistic programming, and he modeled the top 20 traders of the times from the 80s through the 90s. Their rules still work today. They're not any different. Okay. But he modeled them, and I started taking courses from him to learn. I was so hungry to become good. It was, I had to prove some things to myself and to really personally my family. Okay. Just a little bit of background, my family was in like the construction industry. They were very good at it. My dad was an electrical contractor, really good. I can't put a nail in a wall. I can't hang a picture. It's just not my thing. So when I went into the trading arena, my mom and dad were like, "What are you doing? Like we don't know anybody in this. This is not for you," type of stuff. You're just an upper middle class kid. You should just make sure we could find a job for you in the family business. I didn't want to do that. I wanted to go onto Wall Street and make my own way. Um, so I had a lot to prove to myself, and I did everything I could do to get better. And I always look to help people, like to show people what I learned. If I thought it was like, breaking, like some type of new type of idea I came up with. I really found out generally that the market, it was in the market, but it was through deep study and really wanting to become better at this game. So, market's counterintuitive. So when you see a market really rallying up, if it's not truly in a bull trend, it's fooling you. It's designed to fool you. It's designed to get you to buy in so that you basically the interbank market or the dealers. Now, here's another thing. Um, Bank traders don't know about us as retail traders. They don't give a hoot about us. But they're dealing in an average trade size of $5 million per trade. That's an average trade size. Anything under $5 million is considered small. So if you think that you're going in there and they're interested in your, you know, half a lot or whatever it is, they don't care about that. You know, your $50,000. They don't. That is, it's like a gnat, flying around their head. They don't, it doesn't even bother them. They don't even know that we exist. They're not running your stops. You're placing your stops in the wrong place. They're not taking you out of trades. You're just on the wrong side of the marketplace or at the wrong time. And it happens. It takes a little while to learn it. So the second thing I want to talk about is risk management. I personally have never blown an account. I'm very proud of that. Okay. I was a very conservative trader. I never went over my global limits in a bank. I never had to have a treasurer come to me and say, you are over your global limits. We need to have a conversation right now. It's a conversation I never wanted to have. I talk about it in my book, Forex Confidant, where one of the traders actually blew himself up trading mark yen, which today would be euro yen because the Deutsche Mark doesn't exist anymore. So, but if you have to ask yourself a question, you blow one account, okay. You blow 5 accounts, that's not the market, that's you. If you're first starting out and you're learning and you want to trade real money, never risk more than 1% per trade. When you're good, you can go up to 3%. Okay. But I'll get into that in a second. You have to protect your capital like it is your life. It is your financial life. Okay. If you blow your capital all the time, eventually you're going to give up. Say, oh man, I blew, 30 grand trying this and got nowhere with it, and you just throw in the towel. However, if you start off with a small account and you're risking 1% per trade as you're learning, you'll be able to stay in the game longer. And that's much more important, being able to stay in the game longer. Okay. So 3% when you get really good. I would suggest using a fixed delta money management system. And you can Google that. You can figure out what that is by Googling it. It's a very good money management system. It only allows you to trade larger using the market's money. Very, very important. Okay. You got to think like a predator. The market's a war zone. Okay. The Forex market is the most rigorous battlefield there is. $7 trillion a day is changing hands in that market. It is huge. Crypto is starting to catch up a little bit, but Forex is still by far the largest market. Okay. Don't be getting, don't be the one getting hunted. Be the one setting the trap. So you got to learn how to where the market, where the traps are. Now, you you wait for the crowd to commit and then you strike when they're vulnerable. Okay. So in other words, like you have to have a system, obviously, right? And you have to understand market structure, not indicators. Understand market structure, where the market is. I have a lot of YouTube videos on that, like market structure, explaining it. Got a problem? Send me an email, support@parkavenuetrading.com. Be happy to answer them for you. Trade less, wait more. Trade less, wait more. I recently got involved with a gentleman by the name of Merlin. He goes by the name Merlin the Trader on X. And he had asked me to do some YouTube technical analysis for him. Every day he said, can you do my technical analysis for me? And I said, the first thing I said was, because I really didn't know much about him. He's only 24 years old. And I asked him, I said, tell me about your trading style. Like, what is your trading style? And he explained to me, he goes, I trade one time a day. He goes, and I know what my, uh, profitability ratios are. I know that I'm right 65% of the time. I know my drawdowns. When I'm going down through a drawdown, I start trading less money. And so I start to upswing again, then I start increasing my capital. And then he showed me like what he does. And I said, wow, he's a support and resistance trader, and he's very disciplined. He's very disciplined. So I absolutely agreed to help him out because the kid is good for his age. He's really good. And he's mastered some of the things that you guys are trying to master yourself right now. So you got to think like a predator. Don't be the one getting hunted, be the one setting the trap. Trading less, wait more. Okay. Um, if there's no setup, there's no trade. Now, when you just get a feeling about something, like I'm getting a feeling, I'm getting itchy to buy or sell, go lay down until the feeling goes away. If there's no setup, there's no setup, there's no trade. Okay. So stop being the one getting hunted, be the one setting the trap. Also, trade less, wait more. Okay. The best trades really occur when there's no trade, like when you're not forcing anything. So most of the time, the best trade is no trade. Five, okay, build a system, then trust it. Okay, you got rules, routine, review, back test it, forward test it, live it, because real traders don't wing it. They execute their plan. They execute. So that's the most important thing. Next step, journal everything. Journal everything. I got thousands of these guys laying around, thousands of them. And you want to be able to go back in time at the end of the month and review everything you were thinking and why you did it. Okay? Why you did it. Um, a mistake has nothing to do with losing money. Okay, this is Dr. Van Tharp. A mistake has nothing to do with losing money. It has to do with not following your rules. If you broke your rules and you made money, it's worse because you're reinforcing breaking your rules. Okay. Losing money is not a mistake. It's part of the game. All right. So you journal everything, not just the trades, the why behind the trades, the fear, the overconfidence, the impulse. Your journal is going to show you the truth when your ego tries to hide it. Okay. Now, here's rule number 7. You don't need to be right. You just need to be profitable. Get this. Being wrong is fine as long as you're following your rules. Okay? Staying wrong kills you. So if you got a trade on, even if you're following your rules and it's not working out and you should know your system, that if it goes a certain distance away, it's time to just kill the trade. It's not working. On the wrong side for the time being, cut your losses, right? I'm going to tell you a quick story. Um, When I was working on Deutsche Bank's desk as a position clerk, I was working with a guy by the name of Sean. I was on the dollar Swiss desk with him. I was his position clerk. And what we were having a conversation, Mark was kind of slow, really wasn't really much going on. And I said to Sean, I said, well, what do you think? You think that it's going to bounce off this level and then shoot up? Dollar Swiss is going to go back up. Would you be buying down here? And he looked at me and he said, do you want to be right or do you want to be freaking rich? I said, I think I want to be rich, right? I mean, yeah, I want to be rich. He said, then don't try to predict the market. Don't try to get in your head anything about the marketplace. When the market comes to this price, we'll be able to analyze price action, be able to decide what we want to do. If a trade setup occurs down there that it's a buy signal, we will take it. So don't predict markets. It's killed more trading accounts than bad setups. I was like, wow. And it was very hard for me to break that. It was very hard for me to break that. It took years for me to stop trying to figure out like what it was going to do next instead of just following what the market was doing and what the market was telling me. The idea is to ride the bucking bronco and hold on with both hands and your teeth onto the reins. Okay, ride the bucking bronco, said by Bill Dunn, a great trader. If you don't know who he is, look him up. Incredible trader. He's originally in one of the market wizards. All right. So react, don't guess, trade what you see, not what you hope to see. Learn from interbank pros, not internet gurus. Okay, stop copying influencers. These people don't probably know more than they probably know less than you, but they sound good. They sit themselves in front of a Ferrari or a Lamborghini or some Mercedes Benz and they say, "Oh, they're flashing money." Stop copying those guys. Learn how actual dealers think about order flow, execution, and risk. Read books. Read books. Go read Market Wizards. There's tremendous amount of trading books out there you could read. that will actually help you immensely. Okay. There's old books, you can, system development books, and, you know, if they start mentioning RSI and MACD, just forget it. Just you want price action. I try to do a lot on my YouTube channel for price action only. I offer some courses. It's not here to sell you anything. I offer only courses on price action. I offer courses on Fibonacci. I offer in those courses themselves, I dig deep into Fibonacci ratios that nobody really uses. Uh, like 0.82 instead of 0.786. It's very good for skid. I've said that before. Change it, change your tool to 0.82. You'll see our marketplace actually, it's actually better than 0.786. All right, so learn. Learn by reading. Uh, Keep your life simple while you're learning. All right. Now, I know you may have another job, or you got a lot of stuff going on in your life. That's another thing. Uh, if you had a blowout with your significant other the night before you're going to go and trade, you got to really dig down deep inside of yourself and make sure there's no unresolved issues. If you guys haven't made up, you got to really question whether or not you should trade, because subconsciously you might be really PO'd, and you might take it, try to revenge against the marketplace. The market doesn't care about what happened to you last night with your significant other. It will take your money. So you really got to understand psychologically if you're prepared to trade. And that's another principle by Dr. Van K. Tharp. All right. Um, So keep your life simple. Try to stay out of debt. Don't get in over your head over financial worries and you're going to make all that money back in the market. You're not going to do it. Cut your distractions down. Keep your expenses low. You're building a six-figure skill set. Treat it like a job. Exercise. Get to the gym. Work out, which I've been missing lately because I hurt my shoulder. It's an excuse. I got to get back there, but do it. All right. Obsession wins, like I said before. Most traders dabble in this. I treated it like, it was my lifeblood, which it was, because if I messed up in a trading room, gonzo, and very, very hard to get into another job as a trader. Very, very hard to do it. I hope my mic wasn't too low on this, but um, you gotta, live, breathe, and bleed this craft. Really, you have to. It's the most demanding craft that there is. Now, to wrap it up, I wish somebody would have told me this when I was 20. Maybe I went down so many rabbit holes, and I went down a lot of rabbit holes to discover systems. Maybe I wouldn't have been so frustrated because I really, really, since I'm a perfectionist, I frustrated myself for many years. I mean, I was angry, inside. I'm like, I got to figure this out. I got to figure it out. And it was much more simple than I thought it was. So let go of like the complex ideas. Simple is best. If you can describe your trading system on the back of a bar napkin, you got something, as long as it's got a positive edge. Okay. So show up every day, stay humble, never stop leveling up. And I hope this gives you a head start. So if you like what you see, click on the link below. You can get a free ebook and video uh, about price breakouts. And I look forward to seeing you in the next video. Cheers.